Kotak Institutional Equities upgrades NMDC to a buy with a target of 130 rupees a share after the company cuts prices sharply to revive volumes. Says improved capital allocation and higher dividends also add to the bull case.
And the large trade seen in Nykaa, 2% equity changes hands with the PE firm TPG likely to be the seller in the company.
Lurat, the stock does well as the company has expanded its presence, opens 25 new stores in Tier 1 and Tier 2 towns. The company also plans to set up 100 new stores in the near future.
Nazara Tech rallies after the Chief Operating Officer Ajay Pratap Singh gets promoted to the post of CEO at Sportskeeda. Hello and welcome to Chartbusters. It's a Friday morning. We're looking forward to the weekend, but we've got a few hours of the trading action up ahead. I'm Nigel D'Souza and joining me as always, Mangalam Malu. Well, Mangalam, 18,300 on the Nifty. The bulls will say, well, that's okay. Some bit of pullback, 100-point pullback for all that they care. But otherwise, the uptrend, it appears, is pretty much intact. But just looking at, that smoke on your face, weekend plans, you seem to be cooking up something.
Weekend plans are always being cooked up here and there, Nigel. You know, there are a bunch of events.
Here and there. There will be interesting. Huh?
There I won't talk about, but here, let's talk about here right now. There are a bunch of events, etc. We'll do that. But you spoke about 18,300. It seems like between 18,300 and 18,400, there seems to be a bit of a tug of war between bulls and bears. Where do we go? And until, there is a clear winner in sight between 18,300 and 18,400, I think this tug of war will continue, and those who are writing the options on either side will probably eat those premium that they get. But as we talk about, option writers making money and making their profits, etc., let's get you some ideas for profit as well from our colleagues at Money Control Pro. But before we do that, I believe we do have the management of Kalyani Steels with us. R.K. Goel, who's the managing director, joins us now to discuss their second quarter numbers. Thanks a lot, Mr. Goel, for joining in. We look at the numbers going forward and not just the numbers that have been reported. You were focused on the auto space. Can you tell us what the price revision between October 22 and November 22 has been? I mean, if you could give us the quantum and the time for which the prices have been revised.
Good morning. We are trying very hard with our auto OEMs to get a price increase, but still the negotiations are going on, but we could not conclude. And it will take some more time by the time we arrive at a common number which is acceptable to both the parties.
Okay. Hi. Good morning, Mr. Goel. Good to speak to you after a while. You're functioning at optimal capacity utilization level. Just want to clear that out of the way. So demand is strong.
Yeah. Good morning. Yes, we are working at the 100% capacity.
Okay. All right. Now, in terms of pricing, you're telling us that you're looking at a price increase from October onwards. I'm reading a couple of reports, and I believe the OEMs are asking for a decrease. If you're asking for an increase, what is the quantum you're looking at, and also this price revision? By when will it get solved? Sometime in December?
It's a very interesting question. Over the period of last 1.5 years, we could not get adequate revision or adequate compensation of the cost increase, which was very different for flat products. So as far as we are concerned, still our total cost increase is not compensated. We are looking at an increase. Yes, what you say is correct. Based on whatever the happening to the flat products, OEMs are requesting for a decrease. But it is under negotiation, and hopefully in some time we will conclude. But right now it is very difficult to say what number finally we will be able to arrive.
Okay, so both of you all are sitting on the table, you are trying to come up with a conclusion. You are asking for an increase, they are asking for a decrease. How much of an increase do you want?
We have asked for an increase of around 6,000 rupees per metric ton.
And they are asking for a decrease, I believe, of around 3,000-4,000 rupees. So that's quite a wide gap. You will have to really come to some understanding. Otherwise, I don't see how this is going to get resolved. But you said that all your costs have not got passed through, right? How much of it has got?
That's right.
How much of the cost increase has been passed through as of now? As of the last price increase that will took a few months.
You see, the total gap is around 6,000. That's what we are looking at.
Okay.
Okay. And what does this mean for your margins going forward? Because, I mean, June was around 7%. September quarter, we had about 10%. We see steel prices going down, but you are saying that, there is still negotiations which are underway. What happens to your margins?
The margins were pretty low in the June quarter. There was some improvement because of some correction in the cost of some raw materials, but still the correction has not happened that it can take care of the complete cost increase. So if we get this 6,000 or around 6,000, then yes, it will take care of the cost increase, and we'll be back to normal performance what we had last year.
What normal performance last year was upwards of 20% as well at one point in time. Can you give us a sense of how you define normal, and whether that 6,000 doesn't come, then what do the margins stabilize at?
It's finally what the number is settled. It all depends. It is very difficult to speculate or give a number specifically currently.
Okay, but normalized for you is 20%, right?
Yeah.
Okay. That's about, we'll have to wait by to see what the OEMs say, and hopefully you'll come up with a conclusion. But I recall, last year, a couple of years ago, when you all had announced about the cost side. Well, we're looking at setting up a coke oven facility, WHRS as well. Has that been commissioned?
Yes, coke oven is in the final commissioning stage.
Okay.
Very soon it will stabilize in the production. As far as the power plant is concerned, it is still at the final stage of erection.
Okay, so this coke oven commissioning, post it getting commissioned, how much of money will it save you on an annual basis?
On an annual basis, it depends on the difference in the coke price and the coking coal, but we expect around 60 to 70 crore rupees per year.
That's only the coke oven facility. And on the WHRS facility, when does the WHRS facility get...
that is put together.
Put together.
That is always put together, power plant and the coke.
All right. So sometime next year, we will start seeing this cost savings come by to you.
Absolutely.
We've heard a lot taking place in the defense end of things, and your group company itself, Bharat Forge, as well as the group, they've been winning a lot of defense orders. Does that mean some incremental revenue for you as well? I mean, just wanted to understand how much of your revenue comes in from group companies.
As far as revenue from the group companies concerned, it is around 35 to 40%.
Okay.
And as far as defense orders are concerned, yes, we are selling not only to the group companies, we are selling to other than the group companies also. And that part of the business is much larger in size and largely for remelted products, and that goes to our group, our another steel plant, that is Sarloa Advanced Materials.
So you said that not only do you supply to group companies when it comes to defense, you do others as well. I mean, what proportion of your revenue actually comes in from the defense sector?
It's right now it is not much in Kalyani Steel, as I mentioned. Very different remelted products. Those facilities are with our another steel plant, Sarloa Advanced Materials Private Limited.
And the margins from group companies, are they at market level? Are they at lower levels because it's a group company? Or do you charge higher because it's a group company and you can take those liberties?
No, they are totally at arm's length. As far as concerned in our business, prices are finalized by auto OEMs.
Okay.
So we have no choice. We have to supply to everybody at that price.
Okay, all right.
Nobody will give us a higher price because they don't get a reimbursement from the auto companies more than that.
Okay, Mr. Goel, your current market capitalization is around 1,300 crores. What is your cash in your books, your net cash that you have?
As far as free cash is concerned, it is almost close to 1,100 crore.
1,100 crores. Your market cap is around 1,300 crores and you have 1,100 crores. Where is this money invested, sir? Is it some part?
It's largely in fixed deposits with the public sector banks.
Okay, it's not lent to any group companies.
Some large private banks also.
So it's not lent to any group companies. It's most of this
No,
1,100.
not at all.
Mr. Goel, I'm just trying to understand. 1,300 crores of market cap, 1,100 crores of cash in books. Your shareholders must be saying, Mr. Goel, please, give us some money back. Maybe a big dividend. Maybe do a buyback. Or do some expansion at least. For the last many years, you're telling us that you're looking at some inorganic growth, but that's not happened. So why don't you give some money back to the shareholders? They'll be happy as well. You're almost an even Steven market cap in comparison to cash.
Very, very interesting question. Thank you so much, Mr. Nigel. We are at the verge of finally working out some projects which we may start implementing very shortly and announce as soon as we just conclude. And they may be in very diverse products, need not be any steel.
So can you give us a sense of what those products are? How much money will you invest in that? What does it mean in terms of incremental revenue for you?
It is all this working is at the final stage. Very soon we will, as soon as we conclude, we will come back and we will inform.
But you have a sense of how much money you will be earmarking for this, right? Could you give us a broad range? I mean, of this 1100 crore, will it be 300, 400, 500, 600?
Yeah, we are working on several projects. It depends on the project finally which we take on the priority. There is a project in which this complete money can be utilized as equity.
And by when?
There are projects where a small portion of this can be utilized, which is around 20-25%.
Okay, and by when can you give us some further clarity? Because you said you are towards the advanced stages of discussions now, and you're just about to finalize it.
Yeah, but still it may take few months.
So by quarter 4, we'll understand your plan.
Absolutely.
And you don't want to put a number to how much you're going to spend?
Yes.
He roughly did mention 20-25%.
20-25%. So that is 25% of 1,000 crores or 250 crores?
No, what I said, we have several projects. In one of the project, it may be utilized completely.
Oh, got it.
If we go for another project, it may be 20-25%.
Okay, all right. Mr. Goel, we'll wait by for further clarity. In quarter 4, you can join us, and you could tell us more about that. But in the interim, if there is an announcement, we'll be happy to hear from you, and all the best in that negotiation with the OEM. Some difficult times, but hopefully you pull through this one. Well, we'll shift focus now to our special segment where we get you a few ideas of profit from Money Control Pro. Anubhav Sahu joins us to fill us in with the stock he's talking about. Anubhav?
Well, so we are getting constructive on Ipca Labs as the margin profile is expected to improve from here and the valuations are similar. So last quarterly result was mediocre. Sequentially, sales were flattish. Growth in formulations were offset by weakness in API exports. However, going forward, API exports are expected to improve as the channel inventory is normalizing. Now, the company's certain API offering has been relaunched after following new process for reduced impurity. Now, here companies hopeful of regaining market share from Chinese competitors as they are backward integrated. For the capacity constraints are being rectified, and it's the Dewas plant for APIs is under validation process and expected to contribute meaningfully from Q2 of fiscal 24. In addition, domestic formulation continues to do well, chiefly in pain management offerings, and expansion of field force by about 25% is expected to be key driver of domestic presence in ortho, derma, and cardiovascular therapies. Now, in case of margins, incremental cost of new plant and field force can weigh in the near term. However, high cost inventory is phasing out, and we believe material improvement can be seen for fiscal 24. For the post-correction stock is trading at a reasonable multiple, and hence we believe long-term investors can consider accumulating it.
All right, with that, we'll step into a short break. On the other side, we'll get chatting with the management of Car Trade Technologies. Welcome back. You're watching us here on Chartbusters. From one company which has cash equivalent to its market cap, let's talk about another company which also has cash, but that's roughly 50% of its market cap. Car Trade Tech posted a strong set of the second quarter numbers. Let's bring in Banwari Lal Sharma, who's the company's CEO of the consumer business, to discuss their earnings and importantly what they plan to do with their cash for going forward. I mean, we'll talk about earnings, etc. And the reason why I asked this as the first question is because just before we ended the previous interaction, 1,100 crores of cash on the books of Kalyani Steels for a market cap of 1,300 odd crores. Your market cap anywhere between 2,800 odd crores with 1,000 crores of cash. You have said that the immediate utilization for this cash is, to look for investments and acquisitions. Can you tell us at what stage of discussions are you with various opportunities, if at all you are at one?
Good morning, Mangala. So, of course, I wouldn't be able to disclose exact details on that, but you understand it's a phenomenon which will happen over a period of time. The cash is there, quite safe. I've been talking about it quite often. And we are churning cash every quarter. We are earning, let's say, more, and that cash is only getting more and more. The opportunities for us are very important. We want to be in a synergic space. So we don't want to go out and, let's say, invest into companies which have nothing to do with the business that we are in. So that's the fundamental thought. And until and unless we find a synergy of that order, wherein, let's say, the company, the management, the, let's say, people, they align with our thoughts, let's say, we can work with them for so long, etc., we would be very patient. Discussions keep happening all the time. It's just that I can't give you details, Mangalam, where exactly we stand today.
No, well, the reason I asked you that is because, you came with an IPO at 1600 odd rupees. Right now, your share price is less than 500 rupees. Are you tempted to buy your own shares with the cash that you have if you don't have an immediate acquisition plan on the anvil?
I won't be getting into any such details, Mangalam. Again, I'm sorry. You understand more than this. This market in a certain way, organizations, behave in a certain way. I can tell you for sure, and this is not the first time coming.
Oopsie. Right, Mr. Sharma, I think we've got here a bit of a scratching line. Let's try again. Mr. Sharma, you're making a point about the utilization of cash in your books. You said you don't want to make any irrational investments. To that, our counter question was, why don't you invest in your shareholders? They have been with you through all this pain. So why don't you utilize it? Maybe give a one-time big dividend to keep them interested. Maybe do some buyback of shares. What's your response to that?
It may not happen, Nigel. To be very honest, as I said, we believe in what we are doing. We believe there is something really big, let's say, for the future. We are here for the very, very long term.
Yes.
So 1,000 crores in bank or 2,000 crores in bank or whatever, it doesn't matter. If giving a dividend is the right thing, we'll do it. If, let's say, giving buyback is the right thing, we'll do it. But we believe let's be not in a hurry. Let's not really go out and, let's say, take an action which is to, let's say, please somebody, or let's say do something which is in a panic. We would do it when it is required to be done. For now, we are focusing on building great business, and our numbers have been testimony of that.
Let's talk about business then, Mr. Sharma. What's the sense in terms of the outlook? The first half of the year, we have those numbers out, yeah? The first half, in fact, revenues are up 30% odd at around 170 crores odd. Second half of the year, what should we be looking at?
So if you look at, again, we as an organization don't give forward-looking numbers, but I'll talk about the industry, which gives you perspective. You can take new car sales as an anchor for, let's say, businesses like us. The first, let's say, 6 months of calendar year this year, India was selling something like 3 lakh cars, let's say, a month. We moved to something like 3.3 this particular quarter, which has, let's say, gone by. And October was not very different. October, Diwali came around 24th, 25th. And that's when, let's say, typically I'll tell you a couple of good things which will give you confidence about organization and its business in general. That every year, festive is typically a peak. You go to a peak and then you fall 20% approx, let's say, 3-4 weeks after that, and then start building all over again. This particular year, the fall is just about 8-9%. In fact, one interesting thing happened, which I see now in our business, in cars business especially, the festive curve, the seasonality curve flattening a little. So typically Shraddh period, which is before Diwali, those 15 days, people would not really buy cars. They would just sit tight and then they would buy once the festive is over during Navratri or, let's say, Dashera and then Dhanteras. It didn't happen this year at all. I mean, the entire Shraddh went by like it never happened.
Right. So that means short point demand is extremely strong. People are estimating anywhere between 20 to 25% new vehicle sales in this year itself. Just wanted to understand from you, from a macro standpoint, at what rate of the industry do you typically grow? Because new vehicle sales this year estimated anywhere between 20 to 25%. Do you grow 1.5 times that, or 1.2 times, or the same as new vehicle sales growth?
So you understand that we are in a gamut of businesses within that industry. So new car business is only a part of our business. We have new bikes industry, and then we also cater to used car industry. I can tell you that used car business for us is the fastest growing one. New bikes, which was a quite nascent business for us, we only incubated Bikewala in 2012, and we started monetizing something around 2018, is the second, let's say, fastest growing business. And then comes the new car business, which is quite aligned to what you just talked about. Okay. Industry would grow about 20% over the COVID period, but I think this will taper down a little going forward. But India should still grow at about 9, 10, 11% on the new car business for a couple of years, at least.
Okay, all right, Mr. Sharma, we would like a few more numbers about your business. But we look forward to having a chat with you next time, and I'll be interested to know what's the plan with the cash. That's the one that's supporting the stock. So that'll be quite interesting. But good speaking to you today. For the time being, we'll slip into a short break, come back, continue our focus on markets. Well, at the low point of the day, Dr. Reddy's, Eicher Motors, both of them have slipped a little bit. Big boy SBI actually has moved a little bit low in the last few minutes. And L&T, that's the other stock as well. So we're down 80 points. The Nifty bank from trading well in the green has moved into the red. And now you have more number of stocks that are declining than advancing, Manglam.
You do, Nigel. And every time I look at a couple of stocks, I figure out whether you have a plan this weekend or not. I'm looking at United Spirits, United Breweries. Both of them at the low point of trade. Seems like this weekend is in.
It's going to be a good weekend, Manglam. That's all I can say.
It's going to be a good weekend also. So those are the stocks we'll be watching out for.
By the way, we have some information that's coming at the bottom of your screen with regard to PSU banks, and we'll try to get in our reporter to fix you, give us all the details. But PSU bank whole-time directors and MDs can now have a maximum tenure of close to around 10 years. That ensures, some bit of continuity, which the street will like. So these stocks have run up. That's an additional positive news that's coming in there. For the time being, they're not reacting because the markets are under some pressure. But we'll wrap up on this show. Trading Hour comes up next, and we'll take all the action forward.